Hello, hello everyone. Good morning from here, and depending on what time zone you're tuning in from, good afternoon and good evening to you. It's good to be back live again with you, the second half of the week. I couldn't stream on Monday due to some unforeseen circumstances beyond my control. But for those of you following me on my Telegram and Trading View, you already got the commentary update I dropped there where I did give a little bit of insight into what my plans were following up on the weekend market analysis I earlier. Now I'm glad we are back again together as we step into the second half of the trading week. Um, right now, the market is buzzing with mixed emotions. We have optimism over opening, which is obviously lifting risk sentiment at the moment, even as traders weigh central bank moves and shifting expectations across the major financial instrument into the second half of the week. So I encourage us all to stay tuned in, grab your favorite coffees, and let's decode what's really happening beneath of this chart. Now, before we go into the details, first of all, I would like to welcome the newcomers amongst us, those of you who are joining us for the first time. My name is Sheriff Dara, and I will be your host for the next 45 minutes thereabout, where we shall be delving into the market. And it's important that this is not a signal service platform, but instead an avenue where we all come together to have a deep understanding of what is going on in the market, and of course, use that information to position ourselves for what the market is going to be presenting to us. So once again, you are all welcome. That said, we will dive right into the chat, and as always, the first thing we normally do is to dollar market dynamic, since we all understand how important the US dollar is to all of the assets we are monitoring. And like I usually say, there is no way you want to be trading the Japanese yen, the pound sterling, the gold commodity, or even the crude oil without really having an insight into what is dollar market, as the ripple effects of the dollar across majors are very, very significant. Now, since the beginning of October, let's say, I think since mid-September, we've seen the dollar do some sort of recovery. And this is well captured on the 4 hours time frame, which is what you are seeing on my screen right now. We have an ascending trend line, and of course, we can see that in the last 2.5 months, the market had consistently respected this trend line. Uh, and of course, you know how we use our trend lines. As long as price remains above them, we will continue to look out for patterns and structures that support buying ideas, right? And from what we are seeing here, it appears that price is back into that trend line. So in the last 2 weeks thereabout, we've seen the price of the dollar drop significantly back into the trend line. And since it came into the trend line, we have noticed that the market has been a little bit choppy. Price confined within the $99.75 level and the $99.30 level since the week began. And of course, this is a true reflection of how traders are juggling between optimism over the US government reopening and the uncertainty about future interest rate cuts. So, on one hand, there is progress towards ending the US government shutdown, which obviously has lifted overall market confidence. And this, of course, has caused money to flow out of the dollar into riskier assets. Okay. Then, on the other hand, expectations that the Federal Reserve will cut rate in December are limiting any major dollar rally. And this is well detailed and reflected on the chart. As we can see, since the week began, the market has been oscillating just right exactly along that key level we marked out at the $98.50 level. Remember, this level here was a significant factor determining the direction of price action since the first week of October, where it at some point served as a resistance line here. We saw it serve as a resistance mid-October, and then we saw price break out of that structure at the beginning of this month. Now, the back into the structure, doing a consolidation, and this further emphasize how important that key level is. Is it going to serve as a support going into the second half of the week where we're looking at a retest of structure to continue the uptrend move? Or are we going to see selling pressure persist below the structure, breaking down the ascending trend line for the first time in about 2.5 months to incite a massive sell-off? And from this technical structure, which reflects the current sentiment in the market, you would agree with me that price is at a crucial juncture. Looking ahead, markets will also be on the hedge, especially for key economic events. Let's go into the economic calendar. And I want to think that the up and down sideways movement we have been seeing since the week began is as a result of major key players stepping aside from the market, waiting for this data to come in before making any aggressive bet. Now, looking at the economic calendar here, so far this week we haven't really gotten anything from the United States. So today, Wednesday, we don't have anything yet. We just have a coming from the Fed officials. We're from Williams, Paulson, Waller, Bostic, Mira, and Collins, all of which is spread over the course of today's trading session. And others are also going to be watching their speeches for any hint of policy direction. Then we have on Thursday, that's tomorrow, we have a couple of high impactful events. We have the consumer price index. We have the which one again? We have the producer price index coming in on Friday, and of course the retail sales data, which could help confirm whether inflation is cooling fast enough to justify a rate cut or not. And in short, the dollar is likely to remain range bound and choppy prior to this event until this event gives a clear clue on where US policy and sentiment, US policy will be and sentiment ahead of the weekend. So I encourage yourselves to mark out this ones. We are looking forward to speeches today. Tomorrow we are looking forward to the CPI, and Friday we have the PPI and the retail sales data. So now going back into the chart and considering that price is now indecisive, the market is a little bit indecisive at the moment. Let's go into the asset we are monitoring to see how the dollar is performing, or let's say the ripple effect of the US dollar in this particular asset. Okay, So to start with, we will be going into the US oil spot market, and of course, I had a very simple setup here on Monday prior to the beginning of the week where the $59.50 level was serving as my key level, right? And unfortunately, we were not able to run the live session on Monday. So I didn't give an update, did I? I didn't give an update on the crude oil in my commentaries. So you must have missed out on this one. I was able to take a buy move, right? Right from that $59.50 level. And right now we can see a situation where price broke out of that descending trend line. Now, the question here is, will this breakout turn out to be a true one or a false one? Now, it will be a true one when we see something like test the structure in an attempt to continue the uptrend move. And it will turn out to be a false one if price action drops below the trend line where continued selling pressure persists below it to incite a decline, right? Now, the recent rally in the US crude oil could be attributed to optimism over a US government deal boost cause has given investors much more confidence and in the demand outlook, right? Now, the market was earlier it was also supported by US sanction on Russian oil producers, which tightened supply. And then traders are also watching the API inventory data and OPEC Plus monthly report for that direction. However, concerns about OPEC Plus production increase next month are also keeping some traders very cautious, making it a crucial juncture at this point. So like I did say earlier, we want to see if the market will come back and retest the trend line in an attempt to continue the uptrend move, or will it break it to the downside to incite a seller? Now, on the 15 minutes time frame, I was able to spot a key structure here after looking at this move that happened in the last 24 hours. We can see price appear to be doing something that looks like a retracement back into structure, right? And if we look at the 15 minutes time frame, we begin to see things more clearly, revealing how the market sentiment is looking like. So on the 15 minutes time frame, this was what I was able to come up with here. So as you will see, the market has been on a downtrend in the last 24 hours, and currently price action is right below this support line here at the $60.70 level. Now, before we even go to that support line, we can see that we have a technical structure gradually unfolding, and it appears price had snapped out of the structure. So following an impulsive move, as you can see here, following this impulsive move, we can see price went into a consolidation, which looks more like a wedge pattern, or you can call it a flat, which eye you are using to look at it. Now, from a theoretical standpoint, both structures project, or let me say, insinuate an uptrend continuation. But of course, with our experience in the market, we understand that not all structure will follow the theoretical expectation. Sometimes you can be expecting that we have a breakout of structure and instead price drops to the downside. And this is one case of that we're looking here. So for me personally, I'm not too rigid with the theoretical expectations. I try as much as possible to be open and ensure that if price goes the other way, I'm on standby. So this morning I was able to spot a range right at the end of that pattern where price was confined within the $60.80 level, and the $60.70 level. It's a tiny range. It's a 10-cent range bound structure, as you can see here. And I was able to position myself at either the breakout of the resistance line, which will confirm the uptrend continuation pattern to welcome buying ideas, which is yet to happen, or the breakdown of the support line to initiate a bearish move. And from what is going on here, I was able to enter a sell at that point. But one thing I would like us to understand is that theoretically speaking, this does not line up with textbook expectations, right? And most of the time, this could is shaking out a lot of buyers from the market and then gain some liquidity to finally move in the upward direction. So I'm not going to be sitting on my laurels here. I'm going to be very, very cautious. So price may move significantly to the downside for a while before climbing back up. So what I'm going to be doing here is, as soon as price moves significantly, about 15 pips in my favor, I will move my stop losses, secure the sell, and let's see what will happen. So as long as price remain below the $60.70 level, we maintain a bearish bias. So we're looking to sell here. I do have a sell position triggered in that regard already. Now, if I am going to consider buying the market, I would rather want to see price breakout retest the $60.80 level. So what I will do here is place a buy stop order above that's $60.80 level. So if I get taken out of the sell, then that means that buyers are the one dictating the pace. So my stop loss on the sell position will be somewhere around the $60.78 level, right? Hopefully, let me put at $60.80. Let's have enough breathing space for price action to move around. So this is my simple structure guiding my USOIL spot going into this. So let's see how the market is going to play out. We do not have any economic event from the United States today, and neither do we have the EI. I think the API is coming up tomorrow, and of course we're looking at the consumer price index tomorrow as well. So for today, the market will be relying on speeches from Fed officials to know what the future of the US monetary policy is going to look like. So in anticipation of these speeches, this is the structure I will be using to navigate the market today. So I do hope I made myself clear, right? If you need some clarifications, feel free to let me know in the comment section. So I'll take 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on my watch list. Stay tuned. All right. So in the absence of no questions, let's take that as a we are all on the same page. I do hope you mapped out the structures accordingly, as this is what I'm going to be using to navigate the market today. So I wish us all the best of luck on the US crude oil. Oh, sorry about that. I never knew that I was on mute. Sorry about that. So I'll have to take that one again. So, like I was saying, this was the structure I was using that I shared with us in my commentary on Monday. Remember, for those of you following me on my Telegram and TradingView platform, where I cut a range bound structure where price was confined within the 1.31345 and the 1.31600 area. And of course, I had a buy position triggered on Monday. Price went up, came back down into structure, went back up again. Then finally, I got taken out in a loss on that buy position as price hit my stop loss. And throughout yesterday, of course, you know that I do not trade on Tuesdays. I had the same thing also happen. Price went up, came back down, and it continues to follow that same pattern in the last 48 to 60 hours. And this tells us something that the market is unclear on what direction. One thing I can say here is